Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
What's going on, traders? Welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske, and am I excited for this week's episode? First off, the market has been rebounding after all these claims of a recession, but today the price action has been bringing us back within that range. So we're going to cover a few topics today. We're going to go over what is Apex Trader Funding and how it works and how you could use a prop firm to profit instead of using your own personal capital. We're also going to go over some live market insights and trade setups, and we are going to cover some huge sales and giveaways. Now, we do have some great giveaways. Make sure you guys stick around because we're going to put that in the description or in the comments below for you guys to get a free chance to win a free Apex evaluation. All right, sorry about that. So let's dive in. Some benefits of Apex Trader Funding. Apex Trader Funding provides us traders, beginner traders, experienced traders, the funded accounts, right? So that gives us the leeway and the stress-free of not trading our own capital, right? We're sort of dependent on these firms, but these firms want to make sure that we are profitable first. So we have to prove to them that we can pass an eval, and then get funded. So we get access to the firm's capital to trade with the futures market. We earn up to 90% of our profits after 100% of the first 20,000 we make, and we could trade with peace of mind. Like I said before, guys, we have zero personal liability other than the fees that we pay in order to purchase these evaluation accounts. It's a three-step process. We complete the evaluation, we show consistency and proper risk management, we get funded. That's when we trade live using Apex's capital. Now, don't expect us to be trading live and lose all. Let's say we're on a 50K account and the trail stop is 2,500. Don't worry so much that, oh, if I lose this, I blow the funded account, Apex won't want to fund me anymore. I'm down 2,500. This is all not true. Apex is completely fine with you blowing a funded account. Go right back to an evaluation and just beat that process. Get over that step one more time. Take it easy. And just remember that trading is a lot to do with psychology. And because of this, we want to be psychologically ready and we want to trade thoughtfully, not with any fear of missing out. FOMO is the biggest account killer. And step three is we cash out, right? We get funded, we get our payouts, keep up to 90% of your earnings. There's no long-term contracts. Apex doesn't require you to trade every single day in a row. They have rules. Yes, you have to trade 8 trading days before taking a payout, but that doesn't mean you have to trade 8 trading days in a row. You could trade Monday and then not trade again until Thursday, and then you could trade those next 6 days. So take it easy, take it slow, and just know that you could take it at your own pace. And that's, again, the best part of Apex, making us stress-free traders. And that's how we could really profit and trade strategically and not emotionally. So they are running a pretty major sale, 80% off any evaluation account. Use promo code FEVER. This ends March 31st. $40 for resets. Usually these are about 100. Sometimes they're on sale for 50. This time they're on sale for $40 per reset across all account sizes. And lifetime one-time PA fees for any account size are now priced at $125. This is also a huge sale, really bringing that PA fee down. I know the 150K account is usually about $240, so that is almost half off of that fee as well, along with the 80% off the evaluation fee. Apex has paid out $440 million in dollars in payouts since 2022. This is huge, guys. So they are running another sale too. This is a special for the larger accounts, the 250 and the 300K accounts. The PA fee is only $85. That's even cheaper than the smaller accounts. The 250 and the 300K evals are priced the same as the 50K with the original price of $167. With the 80% coupon, that brings it down to just $33 for a $250 or $300,000 evaluation account. And again, you get funded on that. The one-time PA fee is now $85. So in total, if you took one evaluation and you passed it on the first try, you would be spending less than $120 on one of these $250,000 and higher accounts. That is pretty huge, pretty major, guys. I'm going to show you guys the Apex Trader Funding website and how each account varies and is different depending on their size and their take profit and trail stop. So guys, don't forget, win a free evaluation. We're going to post that link in the comments below. So make sure you guys fill that out for a chance to win. Last week's winner is Toby. Congratulations, Toby. We're going to post that link shortly. Join us live every Wednesday at 11:30 a.m. Eastern for a chance to win. Guys, make sure you tune in. We go over some good trading strategies. We usually cover things like the opening range breakout. Today, we might cover a little bit of the volume profile. So let's get into it. I'm excited to get into today's markets and this past week's price action because lately we've been selling off, but just recently we've been pulling back. Before we do get into the markets, I did say I wanted to cover the Apex Trader Funding website along with their account sizes. Now, they did recently add the Wealth Charts plan. This is a different charting platform. So Rhythmic and Tradeovate, these are brokers. Wealth Charts also is going to be working as the broker in this instance. So you can't connect Wealth Charts to TradingView. And today I'm going to be showing you guys TradingView. So because you can't do that, you would need a Tradeovate account. That way you could connect it to TradingView. Hey, what's going on, Jay? How's it going? So let's take a quick run at the accounts and I'll sort of explain why those higher accounts are priced lower than the lower accounts. So on the 25K account, we see the profit goal is 1,500 and the trail stop is 1,500. Pretty even. That's a one-to-one risk to reward if you were to just YOLO and take a trade. The 50K account, we now see we're starting to separate a little bit. Now our profit goal is 3,000 and our trail stop is 2,500. Now we're still pretty even, pretty even there, 2,500 and 3,000 there. The 100K account we see is now even further. We only have, what's going on, James? We only have a trailing threshold of 3,000, but a profit target of 6,000. That is a huge difference. Now, as we go higher, we see the 9,000 and 5,000. And once we get up to these 250 and 300K accounts, look how far apart the trail stop and the profit targets are. Right now, in the 250K account, our trailing threshold is 6,500 and the profit goal is 15,000. So that's over double our trail stop. That is really hard because then we have to be careful because at this point, our goal is 15,000 and we have a trailing stop of 6,000. That doesn't mean we have a hard stop at that 6,000. That means it's constantly trailing on us. So if we're up $6,000 on an open trade and then that trade starts to run against us, well, guess what? That trail stop has now followed us up in that trade. So we have to start taking profits off the table and being careful, especially when it comes to these heavier accounts. They do have a static account. Now, this one, it's a bit different from the others. Contract size is less. There's no trailing threshold, but you do have a daily drawdown. So it is different, but it's interesting. You know, all these accounts are on sale right now for 80%. Make sure you guys use that discount code FEVER. All right, let's get into the market, guys, because what a sell-off today, right? We had a 30-minute supply zone I had marked out from yesterday's price action. This came from yesterday's highs. Right now, guys, we're looking at the ES. That's the S&P 500. If we want, I could even throw up on the canvas the watermark so you guys could see that we're looking at the ES S&P 500 minis on right now is the 5-minute time frame. So let's zoom out and let's look at the 15-minute time frame. And as we see, this is our point of consolidation from yesterday. We had a lot of selling pressure. We sold off and we ended up reaching a new low of day from New York session and this demand zone. Now, this demand zone, I was actually looking for long positions yesterday if we were to test it when the market opened. And let me show you exactly what happened because the market, it played with me, guys. It said, oh, that's your entry? Let me double bottom 2 points away from it. Not even. Look at that. Demand zone 58.11.25 and it bottomed out at 58.12.25, guys. 1 point away. So if it doesn't hit my entry, I don't have my trade. And that's how you guys should be trading too. Got to make sure that if it doesn't hit our entry, it doesn't hit our setup, we have a pre-market plan before the market even opens. We don't take our trades. So we let it play through a little bit. At this point, 11:30 is rolling around. I'm currently done trading in the morning. I trade between 8:30 and 11. At this point, if I didn't have this long position entry, I wasn't taking any trades. Right now, we're coming near the pre-market highs. I know that the market has been a bit more bearish lately, so let's be patient. Let's see if it wants to play out. Now, at this point, too, we could also draw our orb. Now, our orb is our opening range breakout. Some people draw it on the 15-minute time frame, some draw it on the 30-minute time frame. Most do use the 15 minutes. So what I like to do is I'll mark the high and the low of the first 15-minute candle of the market. Skips TP by 1 point, dude. Same thing. Same thing. It'll miss your take profit by 1, then go right back to your stop loss. Hey, good morning. Happy Wednesday, beach bum trading. Love it. All right, so we have our orb low and our orb high, and we see that we had our double break to the downside near our demand. If this did hit demand, what a trade this would have been. But we can't trade off of coulda, woulda, shoulda, guys. We can only trade off of what we see and what we get, and we can only react to the market. We never want to try to predict the market. So we let it play out. We failed the orb high again, and I saw that we tried to break the highs, but I saw that we were failing. Now, I knew that we were sort of running into a resistance level because this big red zone, guys, this isn't for nothing. This is a daily supply zone. So if we're looking at the daily time frame here, and we'll zoom it in a little bit, we could take a look at this candle. Now, this is our last green basing candle that was within this range, this 3-bar range right here. And I'll show you guys that range too. So here's the top of the range and the bottom of the range. So we had our range here. This was our last basing candle before we had our strong move out of that zone with some continuation to our next key level. So that means at this point, there's a lot of anticipated sellers. We're looking for sellers to be hitting the ask or the bid. The ask. If sellers are stepping into the market, they're hitting the ask. Hey, good day, Fairchild. How's it going? All right, so let's take a quick look right back to where we were, and let's fix that. Beautiful. So because we were in a higher time frame resistance level, I knew the breakout was sort of had a better chance of failing. And when I do trade the ES, I trade the NASDAQ as well, right? I want to make sure I'm looking at both of them and have a good understanding of what is at what levels. Are they trending together or trending against each other? Now, I also use what I call the weighted index. That's on the bottom right over here. What that is it's a bundle of stocks that are heavily weighted on something like the NASDAQ, which is the tech index. So that's Microsoft, Apple, Nvidia, Amazon, Meta, and I just recently added AVGO. Now, the reason I have all of these together is because they're within the top 10 holdings of the NASDAQ. Now, I don't know if AVGO is in the top 10 holdings of the ES, but the other 5 stocks that I mentioned, Amazon, Meta, Nvidia, Apple, Microsoft, are. So they have a big pull when it comes to direction if we're seeing a real trend in the market. So using all of these tools, these indicators, which aren't true indicators, they are market sentiment indicators, I'm able to get a good read on the market if I should go long, if I should go short, or if I shouldn't take any trades at all. And that's going to happen, guys. As traders, we have to be able to recognize when the market is in a no trade zone, because when it's in a no trade zone and we try to force something that's not there, that's when we start clicking that buy, clicking that sell, buy, sell, stop loss. It's not worth it. If it's a no trade zone, you're second guessing your trade, you're not feeling it, whatever the case may be, don't take it. Let's see, you want to see the dollar? We could take a look at the dollar. I was looking at the oil earlier. Now, oil was coming into this supply zone up here. Now, what I like to use on oil and the other indexes lately, guys, and commodities as well, is this anchored volume profile tool on TradingView. And what's cool about it is you could plot it at that Sunday opening price. And now I have the weekly volume profile on crude. So I pointed this out earlier, that we sort of had this sort of empty range, right? When we have low volume shelves like this, that's where we look for price to retest and then hold and continue. And that's exactly what we got here. Let's see. I don't have the screenshots on me right now because I was looking forward to going over some more ES and NQ. I didn't think I'd pull up crude for you guys, but it was looking good. I think at this point we were on the 5-minute chart, and that's the wick that was actually the entry. So that was pretty clean. It's always good to be aware of any imbalances that are created and also to know direction. Now, if we're looking at something like crude oil, we've been trending higher lately. For the past about week or so, we've been breaking lower highs and we've been trying to make some higher lows. As for the dollar, I'll look at the dollar every now and then. Usually, if I want to look at something like crude or gold, I'll be aware of where the dollar is. I haven't found much consistency with using it or profitability with using it. So definitely wouldn't take my 2 cents from it, but we do want to be aware of where the dollar is trading in in relevance to where gold is trading, right? A lot of times they will inverse each other. So we see that gold started to find its top up here. Well, this is also where it looks like the dollar was finding its bottom. So that's where we bottomed out. What do you think about wheat? Oh, you're looking at wheat? Interesting. Drop the ticker in here and we'll go over some wheat stocks as well. Let's make sure we're not on replay mode. Right now, we're looking at gold. And gold has been in a very tough range, looking like it is trying to pull back. But we have to remember just recently, we were going on a win streak, right? Look at this all-time high right here, all-time high right here, all-time high right here, all-time high. We had 4 all-time highs within 5 trading days. So that's a really good consistency and a really good trend that we want to try to follow, right? We never want to counter trend trade something, especially if we're coming near all-time highs, but it does become more difficult to trade because when we're at all-time high levels, we're coming into the levels of unknown. There's no historical data to show us this level worked as support, this level worked as resistance. We are in unknown territory, and that's when we have to be careful and look for key psychological levels. Now, key psychological levels fall on levels like the 30-30, 30-40, 30-50. If we were looking at something like gold, if we're looking at something like ES and NQ, we might go by 25s. So it might be the 5800, the 5825, 5850, 5875, 5900. And what these are key psychological levels because when these are the all-time high or new high levels, and we don't have any historical data to go off of, people tend to fall to the psychological factor that we are now looking at. So let's take a look. Wheat future ZW. Let's see. Now, usually I don't trade wheat. I'm more of a ESNQ, which is the S&P 500, the NASDAQ, crude, and gold. So wheat, I'm not a big wheater. Let's see. So it looks like wheat's been in a bit of a downtrend. See, we get eggs up here too. But let's take a look at our supply, demand, any areas of resistance. So we had some resistance here, and we could also go to our settings and extend it to the left. So we could see how that price level worked out. Look at this. Perfect support while we're above it, resistance while we're below it. And now we could take a look down here and see if we have any support or resistance that we might be trading under as well. So really not seeing much. The thing with something like wheat is it doesn't have that strong amount of volume that we see on gold, on oil, and especially on the ES and the NQ, because these are traded in the New York session with very, very heavy volume, heavy liquidity. So wheat doesn't tend to follow the standard of the supply and demand strategy that I use, but most stocks and everything that does have some sort of volume contributed does follow some sort of support, resistance, and of course volume analysis. So if I was looking for wheat right now, I would maybe mark out the recent highs and find these as resistance. I would use a price level and mark out the recent low and look for a fake out down here. So I would look to see if we could reverse once we break this price level of, let's see, 53, 530. This is 530 on wheat. So let's get back into, let's take a look at gold. Now, gold was starting to hold. I had a demand zone right here on the 15-minute time frame. I'm sorry, 30-minute right here that we may have broken pre-market, but we were still trying to hold it once we were able to reclaim it. So once we are able to find some type of clarity towards our zones or some type of reason that gives us the confirmation that we should be taking this trade, that's when we should be trying to pull the trigger or look for some other confirmations to find those entries. So using something like this volume profile, for this is the weekly volume profile, it gives me the volume average. Now, that's the developing volume average. That's going to show me where the 70% is of volume being traded. So right now, our volume average, we see the blue lines at the high and the low, and I'm going to actually make it a bit thicker so we could see it even more clearly. We see that whenever we extend higher or towards a supply zone and above our range, we end up pulling back towards our range. This happened one, two, many times now. So watching this one, two times, three times, if we were looking at over here, what I wanted to see this morning when market opened. So again, I start my trading around 8:30 a.m. Eastern. I was looking to see if gold did want to push into the supply zone one more time. As you see, I even had my alert set and everything. Unfortunately, gold market opened and we started pushing lower. We had a pretty strong sell-off. Do you trade MBT? Let's take a look. Micro Bitcoin? No, I don't. I don't. Let's see. Micro Bitcoin. We'll look at it on the daily, get an idea of it. Bitcoin would be more of a buy and hold for me, in my opinion. I like Bitcoin anywhere under 80,000 for a buy and hold, because I do believe it will see that 100,000 again, probably that 122. Like 120 over here. If we're looking for key psychological levels, of course, 125, 150. These are key major levels. Now, look at how we reacted the last time we were at a key psychological level, that 100,000 level. Let's see where we were and what happened afterwards. So let's do coordinates. We're going to do an even 100,000. Well, we broke it. We tried to hold it, and we just started chopping, right? Price got weak, but all in all, it probably went, we could use our ruler tool. It went to highs of 111. So it went about 10 points, 11 points above its 100K mark. So with that being said, I would want to see if we could break this 100K mark again, which is now at 111, and that bring us to our 120 level. And that's what I would sort of be looking for on Bitcoin here. But we'd really need to see some type of volume or something come in. As we see, we do have some good spikes of volume over here once we started making those new all-time highs. So we would need to sort of replicate that, right? Stocks, crypto, whatever we're trading cannot move without volume. There has to be some type of volume to move it, buying volume, selling volume. And that's why us as traders have to be patient, because that volume won't tell us what to do until it's already there. And a lot of times people get a little anxious and feel the need to take a trade because they have to get in before the move happens. But guess what, guys? When that move happens, it's not just going to happen and be done. It's going to happen. It'll pull back. It'll give you an entry on a pullback. It'll happen. It'll give you a second leg, right? They always say a second leg entry. Most moves have two legs. They have the impulse move, a pullback, followed by the second move. And that's what we like to look for our entries. If we try to anticipate any type of move, then guess what? We're going to be holding the bag on a lot of trades we maybe shouldn't be. Now, something I wanted to point out on ES, and I'm going to delete some of these price levels, and I actually am going to get rid of the watermark there just because it's a little in the way. Let's clean up the charts. Let's get rid of, this is an old orb from the other day, opening range breakout from yesterday. Don't need those anymore. It's always important to clean up the charts, guys. Keep a clean chart so you're not second guessing every price level you have. And plus, if you keep a clean chart, what happens is you no longer have that anxiety of, should I short here? Should I long here? Should I short here? No, you have your zones. You already went through them pre-market. You're ready for the day. You're ready for what the market has to offer, no matter what the market offers. Got a few scalps in a week from Met. Just nice. Very good. Good stuff, guys. Yeah. Let's see. Now I'm taking a look. Now we could take a look at ES here on the 30-minute. And as we see, we started dumping below this 5,800. Now this was a key level I was looking at. I mentioned it to my community over at Bullish Bears that I wanted to see this 5,800 break and sort of push lower. And I wanted to see that 57.76, which we are getting close to right now. That is looks like it was no, there's the 30-minute demand. Sorry, 57.74. So we do still have a little ways to go, but look at how we fell away from this big range. When we were within this volume range, we would sell the highs, buy the lows, sell the highs, buy the lows. There it is, guys. There's that 57.73. right as we're talking about it. Big sell-offs, guys. Big sell-off today. A lot of times when the market loses its grip and demand starts to fail, we see some huge sell-offs, and it's really important as traders to be able to profit off of these, right? We have a demand zone here. We see we came into it, but we didn't find any buying here. We had heavy volume, but the volume was bringing us to the downside, and it was also bringing us off of a supply zone. So because there were too many things giving us a little bit of conflict, we were being patient, but it was definitely looking more to the bear side. What happened? We entered the zone. Buyers tried and they failed. They tried and they failed, and they tried and they failed. And that's sort of where we would be looking for our entries. Once we know the direction of the market, we're not trying to short it every time we break lower. We're trying to take that short position once that market or that candle, if we're trading on the 5 minute, sort of pushes green, so we're able to get a short entry somewhere within a wick because we're expecting price to continue lower, and we already had the confirmation that that is the direction of the market. So once everything starts lining up, that's when we could start seeing some consistency. Guys, don't forget, fill out the form in the comments below for a chance to win a free Apex Trader evaluation account. It's a great way to get started into futures trading, and it's a great way to also take some good profits with putting very little of your own capital at stake. Make sure you scan that QR code. It's right over here for a chance to win. All right, there we go, guys. Look at this reaction right off of this demand. So now I also use a tool called Bookmap. Bookmap is a great order flow analysis tool. Gives me an idea of where there's possibly buying, selling, and it also tells me what the CVD is. Now, the CVD is the cumulative volume delta, and this tells me if there's heavier buying or selling volume. So when we have a negative CVD like we do today, that's negative in the tens of thousands, which usually only goes negative a few thousand, then I know that we have very aggressive selling pressure. And that also helps me find that direction and that continuation. But guys, if you want, make sure you join next week and I will cover more of the Bookmap tool and how to use it. I think we might actually have a guest. I think next week is April 2nd. We might have, I think it's Peter, the Einstein of Wall Street here. So that's pretty exciting. Definitely looking forward to having him on. Great stuff, guys. Look at this beautiful reaction right to that demand zone. So you see, yeah, exactly. You could use divergence on the CVD too. Great job, James. Good job. Just like you would something like the RSI or the MACD, you would look for divergence between CVD and price. Well, we see right here, where was it? I saw it looked like CVD pushed lower. I thought I saw CVD push lower while price pushed higher. But what we would look for something like that. Let's see if we find anything. Let's see. It looks like right up here. So you see, it's not the best example. We'll find a better example next time for you guys. Wasn't looking to cover the CVD for today. Just wanted to cover a little bit of how important it is to have a volume analysis tool, because it can help you see something that you might be missing on a candlestick chart or something that you sort of have the wrong bias towards. All right, guys, I hope today's Futures Fever helped. Make sure you guys hit that like button, hit that subscribe button. Make sure you join next week, too, for next week's Future Fever session. And fill out that form in the bio for a chance to win. I'm sorry, in the comments for a chance to win a free Apex Trader evaluation account. All right, everybody, take care and happy trading.